Hello and welcome to the trade setup. In this video we are looking at OKTA, and here we have a 1-2 setup. Now the wave 1 is a little bit questionable. I think I would rather consider it a leading diagonal, and I do know that the IPO had it start at like $17, so it might not necessarily be the lowest point, but to be honest, Elliott Wave theory focuses on that market sentiment, and that is driven by volume, and there isn't necessarily that much volume during an IPO as it is when it is publicly traded. So really it doesn't even matter. I could even use this low at $17 and say that okay, this is a 1, this is a 2, this is a third wave, this is a fourth, and then this is a fifth, because I would anyway be looking for a leading diagonal in this wave 1 due to the structure that it developed, because I am looking here and I can't really say that this third wave is anything but an ABC pattern. I could count it differently, but then I would still be missing waves. I couldn't find another way to count 5 waves for wave 1 or wave 5 necessarily. But for now, we don't need to focus too much on that. Here we quite possibly bottomed in a wave 2, and from this point I would say that we quite possibly completed a series of 1-2 setups. So 1-2, 1-2, and then this could actually be another 1-2, and now I would really like it to hold the wave 2 support and actually produce a stronger reaction to the upside in an impulse in a wave 3, especially because yeah, we already built a series of 3-1-2 setups, so building even more of them, even if we keep forming higher highs and higher lows, would lead it to become a little bit unrealistic in terms of what we would start to expect of the actual third wave that would finally develop. And yeah, it could honestly create a super bullish reaction to the upside by building even more 1-2 setups, but we also have to check in with ourselves and ask is this a sustainable plan to follow such a series of 1-2 setups, or are we just building a larger correction that would then break down and even reset here a wave 2. Now we are still within the support zone for this wave 2 between $108.9 down to around $37.9, and we didn't max it out. We could realistically start going lower directly in the C wave to the downside, and this could have been just an ABC that developed, and this 1-2-1-2 could have been an ABC, and then this would have just been a wave B. It could also be that we are here developing still an ABC, but the C wave only has a wave 1 up so far, and this would be the wave 2 down, and then we get the third up and the fourth and the fifth, and then we have a wave B complete. So this chart, we still have to be very careful on this chart, but there are decent chances, there are levels of support that the structure has already formed, and we already benefit from them in this area here. Very strong reactions to the upside from both of these, and then here we actually got a decent reaction by stopping this massive and strong downtrend, and I would really also consider this 50% retracement level a very good support zone to look out for. And yeah, within this latest development, now we are focusing on the latest 1-2 setup that developed. And here I would say that we quite possibly are within the last few steps of the C wave to the downside, where I consider this. So this is the wave 1 up, and this is an ABC pattern that is developing in the wave 2 here in white. And within it, I would normally expect the wave C, or not expect, but I would ideally look normally for the 100% extension for an ideal target for a wave C. But in this case, the A wave was quite strong, the B wave was quite weak, so I could realistically see the C wave extend much less, and maybe only to the 61.8% retracement at the $84.4 level. And I also have to say that this time, normally I do allow, and even in this case, I do allow up until the start of the wave 1 for a formal invalidation of a 1-2 setup. But in this case, I would find it really hard to believe if we break below the 78.6% retracement support zone at $80.5, and especially the 50% retracement at $80 of the larger support zone, considering the support that we previously had. Okay, a brief break where we get to these levels is fine, so I suppose I wouldn't necessarily consider it too far if we go to the $77 level. But I would really not like it to retrace more than that in this case, and I would really start to consider more direct downside if we actually break those support levels. So in this case, yes, I find it very likely and very possible that we either stop at the 61.8% retracement or 61.8% extension level, or the retracements, either this one or this one, it's basically the same price, as well as the 78.6% extension. And again, the 100% extension of the wave A for wave C is an ideal target. We don't need to get there, we don't need to stop there, never. So for now, looking at this wave C, I would say that we could look for 2 more lows, where I would say that we had a 1, 2, 1, 2, then this would be the third wave down, fourth wave up, where we already maxed the support zone at the 50% retracement at $92.7, and then I would like to see continuation to the downside in the fifth wave, and then possibly, not necessarily, another 4-5 pattern. Sometimes we get early reversals where maybe we get another low, but it's truncated because the chart would present strength and wouldn't really want to form another low, and the market sentiment is really shifting in this area. It could realistically also be some type of a different count, where maybe it is an ending diagonal and this is 1, 2, 3, 4, 5, and then we would have an ABC that would be developing here. Doesn't matter too much. The idea is I am mainly looking at the support zone here in this area, these levels, to hold and produce the reversal to the upside. And if those really fail, as I said, the $77 level would be my last point that I would really consider with higher probabilities that we are shifting to the upside, although even a break below the support zones here at the support levels would be a not so great sign. And one last thing I want to do is actually provide you a target for the fifth wave to the downside in the case of this wave 4. And the first target I would be looking for would be the $86 level, and then down to the 61.8% extension here. That would also align with the 61.8% extension of the wave A to the downside. So they do overlap quite decently. I also want to remove this from the chart. I should have done that a little earlier because it would have been easier to read in this area. But yeah, anyway, so far for this 1-2 setup, I am mainly looking to find support in the white support zone, especially at the 78.6% retracement level. The $80 level is a big level, a big key, I would say, and I can allow down to the $77 level for a higher probability reversal. But for now, these are the levels. This is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.